Morning, market chameleons. Thanks for joining us Thursday morning for the morning show. How you doing, Dima?
Good morning, Will. Good morning, everybody. Thanks for joining us. Um, let's get started with let's do the disclaimer really quick, Will, and then
Perfect.
we'll jump into what's going on in pre-market hours. So everyone, before we get started, thank you for joining us today. Keep in mind, Will and I, we're Market Chameleon. We're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, please contact your registered investment advisor or call your broker. They should be able to help answer your questions or provide you with guidance. There's the disclaimer.
Awesome.
And with that, let's get started. Just going to share my screen real quick. And what I thought we would do today is maybe go over, we'll see what's moving in the pre-market hours. We'll take a look at what's coming up in the earnings front. Then I think we'll take a look at a couple screeners. Maybe we'll go over a straddle screener. And if we have some time, maybe we'll take a look at the
Actually, now that I think about it, Pavel, I think it was Pavel yesterday. He's from the Czech Republic. He was asking about, he wanted to look to see if there were straddles that were trading somewhere below their, they were trading lower basically than they have previously going into earnings. If there was a place you could look at that. I know he was asking about that yesterday.
Okay, so we'll take it. So we'll take a look at the earnings as well. We'll see what's coming up in the earnings. Take a look from the perspective of price movement. So with that, well, let's get started. We'll see what's moving in the pre-market hours. So this report here, stocks moving in the pre-market hours. This is before the market opens. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I'm going to filter out the highest market cap stocks here, which are over, I'm using this filter market cap. So stocks that are 20 billion market cap or higher, I'm going to use that filter. So we see here on the gainers list, 2 on the gainers list, 98 on the decliners list. So looks like, very weak opening, a lot of stocks down in the pre-market hours. The one on top, NIO, that's been actually popping up there a couple days now. It's probably, I'd venture to say, a new 52-week high here. Let me take a look. So NIO, right, 27.17. Yeah, so that's a 52-week high. We see there's that range, $1.36, 26.96, and that's in the electrical car manufacturing. Is that correct, Will?
Out of China, yes. Largest producer of electric vehicles in China.
Wow. Okay. So that's up today, and it was up 22% yesterday.
Yeah. During the sell-off, I think it got down to a couple dollars. In April.
So that's a phenomenal return from the bottom. Let's take a look really quickly at the unfiltered report, see what pops up to the top. So here in a pre-market hours, got the SPI, that's gaining 85% in the morning on 11.6 million shares. This is a small cap market.
Let me guess. Solar.
Let's take a look. Let's see what it.
We actually had in the chat, they're discussing whether it's a real company or just another momentum mover.
Right. I think it looks to me, there's some news on it. It looks like it's electrical vehicle SPI. Let me just I'm going to click on it. Let's just get an idea of what's going on in the stock right now. So, okay, so it is solar, right? SPI, solar. I'm going to click just to get that more information on it, about it. So, utility costs company provides range of engineering, procurement, construction, marketing various PV. So some, I guess, in that space though, in the solar space, SPI, it closed yesterday $7.18. We see, look at the 52-week range, 55 cents, $46.67. Trading $13.30 in the pre-market hours. That's up 85.2% from yesterday's close. VWAP price in the pre-market $12.03. We see the range in the pre-market hours, $7.46, as high as $14.16. Volume in a pre-market, 11.7 million compared to a float of 11.4 million. So you could see there on a relative basis, it's trading a lot of shares in the pre-market hours. This is what the chart looks like. So it's kind of like, looks like just up, up, and up in the pre-market. Longest VWAP bar here, $12.93 to $13.46 on 3 million shares. Looks like there's some kind of, there's news on there, some kind of an agreement. I'll let you guys take a look at that and you guys interpret that, see if this move is warranted. But let's take a look really quickly from a gap up historical perspective and see the price action after the stock gapped up in the morning. What did it tend to do after the opening? So here we're taking a look at, in the last 3 years, the 12 largest gap moves to the upside. So this is what we're looking at, 12 largest gap moves to the upside. What did it do after? So here we have the dates of the moves, any press releases associated, corresponding to that move. And here's the actual move to the upside gap move. So we see like pretty big ones here. On average, 82.3%, 12 largest gap moves averaged 82.3%, which is like right where we are now. After the opening, this is what it tended to do. From the opening to the high of the day, average move 126% from open to high. It looks like here, this one's really skewing it up. So let me just take a look at the median. Let me see. I don't think I have a, so the median move 7.3%. So obviously this 1200% really skewing that up. Okay, so keep that in mind, the 1200% over here. From the open to the low, the average move down 23.4%. So you could see it could be very, very volatile coming out of the gate during the day. The average move from the open to the close of the day. So here it tended to go finish lower more oftentimes than higher. 75% of the time it was lower by the close from the opening price. 25% it was higher, but the average was 18.9%. So it averaged 18.9% returns, and you see here, some of these really big returns added to on September 23rd after the open, added another almost 300% to its gains. Over here, January 23rd, 2019, we see it open up 27%, added another 131%. So very volatile, this stock, low market cap, be aware of it, but that's the price return distribution after opening to the upside from a historical perspective. I'm going to close this up right now. Well, do you have any questions specifically on the pre-market?
No, but it is funny. John, who I guess listens to our show quite a bit, is calling probably me out more than you, but he's calling us out because we mentioned it, I guess, 3 weeks ago when it was up. It had the stock has been as low as 50 cents, right? So, neither you or I trade penny stocks, right? So we're just showing what's moving in the morning. I mean, you and I come from an options background and trade options. And, so it's just interesting, John has mentioned that you and I just glossed over it 3 weeks ago. But
so here's SPY in the last 2 weeks, it's gap history, right? So when you come down here, the list below, this shows you in the last 20 days what's been gapping in the morning and what it tended to do afterwards. So
nice.
Let's take a look here. So this is its history here. Here, September 23rd, September 24th. We see here gapped up 240%. September 24th gapped up 93%. September 30th another gap 7%. October 5th gapped up 5%. October 6th up 2%. October 7th up 13.5%. October 8th 1.7. October 12th 4.7. Obviously today another gap up. This is what it did, in the first half hour. So this one, it actually narrows it down even more. Looks at what happened in the first half hour by 10 o'clock after the open, and then by the end of the day. So we see here in the first half hour, I mean, you know, it's almost like, you know, more times it was lower, it looks to me, you know, from here, I got like 5 of them lower, 3 of them higher. It looks like the distribution, it could be, you know, here's an 11.2% gainer, 23.4% decliner. So that looks like, you know, it's very pretty volatile in the morning. Here we see, you know, what it did by the end of the day. So you could kind of just take a look at what it's been doing in the last 2 weeks.
Yeah, that's great information.
Even those gap moves, it's you know, it's pretty volatile, like you see in the morning, and we see it looked to me like more often it was lower than higher, but you know, those percentage moves are pretty big. Well, what was the question on that SPI?
No, it was just it's a discussion on the chat, and you know, the Chameleon community is like rich in information, right?
Yeah.
And so one of our chameleons out there, John, must have brought it up, and you know,
yeah.
one thing's for sure, I do not have all the answers. I mean, my wife constantly says I have no possibly good answers. So you know, I was not one who looked at this stock on that first move and was like, which I never do, and so you have to buy it. But these penny stocks move so rapidly, you have to be super careful with them. And
yeah, because what happens is that what's going on right now is that other people are looking at these reports in the morning and looking at the biggest percentage gainers, biggest percentage losers, and because of that volatility, you're going to have participants who usually wouldn't even trade in these stocks or have any idea about them. They're just looking for volatility, and they're going to jump in really quickly, potentially just trade them today, right? They're just looking for really quick, you know, in and out type of trades. So when you're looking at these small market cap stocks, that's what's usually happening. Like here, SPY, you know, already SPY. 12.7 million shares trading in the pre-market hours compared to this float 11.4 million. You know, so it's already like a ridiculous amount of
volume. And we've seen the trend every morning, right? 2 or 3 mornings a week, there'll be either a biotech or a, you know, a cellular company, something. And Jake makes the point this morning. He said EV meets I forget what he said, but it's like electric vehicle meets solar. You know, what a story? Question mark, question mark, question mark. You know, it's like, you know, these things, you have to be super careful. You know,
let me see if I could find let's see what these solars have been doing. So here, this is in the last 2 weeks. I'm going to filter it by solar. So this is what's been going on. This report summarizes, you know, what the stocks that gapped up, you know, what they did in the first half hour and by the close. So let's just take a look at the solar sector, because one of the things we have been seeing is biotechs and solars, right, popping. So let's see. So this is in the solar sector, and oh, hold on, let me unfilter the SPI. So these are in the last 2 weeks, all these solar companies that gapped up in the morning. All right, that's what I'm filtering right now, and this is what tended to happen as a group. Compared to the control group. So these are all the stocks that gapped up in the morning in the last 20 days. These are just the solar. So we see that if we just took all the stocks that gapped up in the morning by 10 a.m., from the opening to 10 a.m., 43% of them were higher, 56% were lower. You know, average, there's on average, you broke even if you bought every single stock and sold them in a half hour. By the end of the day, 49% of them were up, 50% were lower, you know, somewhere in change. This is the average return. But if you look at the solars, 56% of them in the first half hour were higher, 44% lower. You know, this is the group, you know, these are all the stocks in here. So you could see here, this is this is the price it was at the open, up 2%. This is the price it was at 10 a.m. So from From the open to 10 a.m., it was down. From the opening price to the closing price, it was up from 63.93 up 6.4%. So that's how this report's working. So we see here in the solar sector, 56% were higher by 10 a.m. versus 44% lower. So that's doing better than the overall control group for an average gain of 1.6%. By the end of the day, 56% were higher versus 49% in that benchmark group, 44% lower versus 50%. On average, they gained 4.8%. So just in general, if we just did it against, the overall benchmark, they did a little bit better. Let's take a look at a lower market cap. So I forget what this market, let's do under 500 million because this one was a lower market cap. So look at what's going on in the lower market cap stocks. By the end of the day, those lower market cap stocks, 28% only were higher from the open to the close, where 72% were lower. But the average gain, because they're so volatile, still was positive 12%. So even though you had many more losses than wins, the wins offset, the losses here. Let's take a look at, now I'm interested to see what about the higher market cap stocks. So let's do over $1 billion. So these are, remember, solar stocks that are over 1 billion market cap that gapped up in the morning. So here we see, here's our control group. So 61% of those stocks that open higher from 9:30 to 10 a.m., 61% of them gained during that period from 9:30 to 10 after the open. 68% of them were higher from the opening to the close of the day. Average gain 1.8%. So this is what it looks like in the last 20 days, which is like more, that's more than 2 weeks of data because these are trading days. This is how they tended to react, after the open. So that's in a solar space. And we've been seeing, like you said, let me guess, it's solar. And I'm just going this as an example because it just popped up at the top of the list. Right. So that's the only reason I'm using, and that's what I usually use as an example.
Listen, it led to some great conversation. I mean, the chat was all over the place with it. Hey, before you move on, I just wanted to give Nag S. He's asking about Peloton, and do we see a Peloton going up or down? And obviously, if we knew that, we would be a great reader of a crystal ball and probably wouldn't be doing Market Chameleon and get on the show right now. But I just thought maybe you could show them what the traders on the floor, the implied vols for the daily moves was showing him.
Sure. So what is the symbol on that?
PTON?
PTON. Let's take a look. So this one's been a high flyer, right? And it's
been a great one of these great stay-at-home stocks.
Right. So. Exactly. People staying at home, they're ordering and we discussed this. This is it's what you see on the commercials, those exercise bikes that have a social element to it, right? They have those screens that you could do exercises and I don't have one, but
they're super expensive. And there's also, they fit into the membership or the membership model. You have to pay monthly for this, for the access to the community and the videos and the live stream. But really it's an exercise bike with a nice monitor attached to it, a touch screen monitor.
Right. So that's a pretty good. Not only do they sell you like the hardware, which is super expensive, then they also have like recurring revenue from the subscription. Do you have to have a subscription to it, or just you? Yes. If you want to use the, you do.
I mean, listen, you turn off the subscription. Full disclosure, my wife bought a bike a couple years ago, so we've had a bike almost since inception. And it gets used, but I'll tell you, it's not that far from becoming a coat rack. So I don't know, that's really? My experience. Yeah. I mean, she does use it, the kids use it, but it's not used every day. Hopefully my wife isn't watching the show, but our for whatever reason, our membership stopped. I think it was her credit card was lost and she didn't call the company and put a new card on.
Okay.
And you could still use the bike, right? It's just you can't use the software.
Right, and it's the software that makes the difference, right? That's
what they say. It's as motivating as going to a class, is what they say.
Right. So let's just take a look. Let me just see.
And Mike is right. Mike is posting. They do sell. You can buy the subscription without the bike too, so you can use the subscription on your iPad.
Right. So this is the This is the Peloton, chart right here. So you can see it's just way up. Let's just compare it to like how it did versus the overall market. So you see here like so it spiked way up here. And when we talk about like how long is it? It's not even been like it's not even 3 years out, like 2. It's very hard to even judge how these come, because they're right now they're not earning, right? It's just sales, a lot of sales going on here. And a lot of times, it could be over enthusiasm. Sometimes, you don't know, because it could be a disruptive technology and just take off. So I've seen it go both ways. Like I've seen, remember those taser, the taser gun?
Yep.
Remember those when they first came out, that taser, like people were like, that's gonna, change, replace guns and stuff. So that's what happened. The stock was going way up. Then like just all of a sudden, when people realized what the actual revenues, where they would stabilize, where the earnings would be, then it just like came crashing down. Same thing like the cannabis stocks, right? When they first came out, everybody got really excited. Then they went way up. And it's hard to say, because right now it's based on hype, it's based on sales, but where it's going to settle, we don't know yet. So it's tough to say with these. There's not a lot of data, right? So right now you're really just, I think when stocks like this come out, it's almost like if you believe in the product, you're kind of just investing in it and supporting it, right? And it's but to say, is it undervalued, overvalued? That's difficult to say. But let's just take a look what traders are doing here in the options. So right here in the options, the order flow looks neutral. Big money stock flow looks neutral. The only thing I see is that the options right now are elevated. So in a 30-day, if you're just looking at to hedge your risk for 30 days, like buying a put for 30 days, that's 10% premium, right? So you're going to pay a lot for just to protect that downside risk. That's 10% premium for 30 days. And usually it's around 8.9. That's all I see here.
What happens if you click on the options and go down to the implied vol?
Like the options chain?
Well, I was kind of looking, I was actually looking myself down implied moves. If you go under volatility, and implied moves, that's an interesting graph to see every day what the implied moves have been.
Yeah, so let's just take a look on a daily. So this is what, if we took the options and said so the way the options work, if people know the binomial, the Black-Scholes model, what it's doing is predicting average daily moves, because you're hedging the moves, you're hedging your delta or your gamma. So this is comparing the average daily predicted move versus what the actual move was. So you could see here, the times that it broke through, right? So this green bar is saying that day, October 9th, the actual move was 7%, was up 7% versus the predicted move 3.3% from the previous days. So you could see a lot of them, broke to the upside. Here's one to the downside, but let's just take a look at the stats. So out of the last 20 days, 13 days, the move was within its range, didn't break through. Seven days out of the last 13, it broke through. Here were on average, this is what the daily implied move was, up or down 4% versus the actual move of 3.5% up or down. So this is pretty much like if you're just looking at that, that's how options would be priced if they're priced correctly. That's what you would usually see these types of situations. So here it looks like the options are pretty well priced day to day compared to where it's actually moving. So they're not underpriced and they're not grossly overpriced. You know, they have a slight premium here for some kind of like uncertain event. So that's how you would look in the last 20 days. There's no question. Should I go to the earnings?
Yeah, let's get a quick earnings, and you've got about 7 minutes.
Okay. Let me take a look here. But if one thing for sure, like these new stock, if you're trading, you know, trading even direct or not, because they could be very volatile. Using spreads is always probably a better idea, because at least you're in a spread, you're reducing your risk, increasing your probabilities a little bit. So vertical spreads, you know, straddles, butterflies, that kind of stuff. So let's just take a look what's coming up in the earnings front in the next 2 weeks. I'm going to filter out stocks that on average trade at least 5,000 contracts or more per day. So on average, 5,000 contracts or more. I'm going to take a look for what's coming up in the next 2 weeks. So we got over here, these are today. Let's see, tomorrow, SLB, that's, I think, what's that, Schlumberger? Right, Schlumberger, that's coming, expected to report tomorrow before the market opens. Right now, the expected, the straddle is expected to move 4.9% in either direction. So that's if you're buying a call, buying a put at the money for an option that covers the earnings, 4.9%. That's the expected move. That compares to historical average moves in the last 4 quarters of 3%. So that's in absolute terms. And in the last 12 quarters, 2.4%. So we see that's right now 3.1% above the 4. Wait, did I do? Right, 3%, sorry, in the last 12 quarters, 2.4%. So that's 1.9% above the 4-quarter average and 2.5% above the 12-quarter average. The high move in the last 12 quarters that is 8.8% in SLB. ALLY, that's the financial stock, right?
That is.
Let me take a look. Right, credit services, Alley Financial. So that one, as of yesterday's close, the straddle was implying a move of 4.8% in either direction. That compares to a 4-quarter average move of 4.5%, 12-quarter average move of 3.6%. The high move in that stock in the last 12 quarters, 6.8%. So we see almost in line with the 4-quarter average, 1.2% above that 12-quarter average. Halliburton, that's already next week. Right now, the straddle is implying a move of 9.1% compared to a 4-quarter average move of 2.6% and a 12-quarter average move of 3.6% with a high move of 9.1% in the last 12 quarters. So that's really quickly just a couple of them that are coming out, upcoming in the next 2 weeks. We got a bunch of them, you know, next week we got a bunch more, as you could see. So we'll get into that starting tomorrow and Monday. Any questions on that, on the earnings front?
No, I think you're good.
Okay. Actually, we only have a couple minutes left, so I'm just going to take really quickly. Let's just take one as an example here. Let's take SLB, because I don't think I'm going to get to the screeners. I don't have enough time to set it up. So let's just take a look at SLB. We'll take a look at it from a historical perspective. So here we see, just like we showed the daily moves, these are the expected moves up or down according to the option straddle. These are the actual moves. So we see here the expected move on when it reported on April 17th before the market opens. The actual move after earnings were announced was 8.8% compared to what the options implied, 8.2%. So slightly above where the straddle was implying. This is what it looks like historically, and here's the summary. So 75% of the time, the options overestimated the actual move. On average, the predicted move going into earnings was plus or minus 3.8%. On average, the actual move was 2.4%. So you get like about a 1.4% average differential between the implied and realized move. Let's take a look at what the implied volatility did really quickly, and I'll let you guys go. So here, on average, when we look at the 30-day constant maturity, right? So when we're looking at implied volatility, we want to go out a little bit further, where there's less gamma, more vega. So we're looking at 30-day constant maturity option, not the near term, but the further out. So on average, implied volatility day after reporting earnings was down 12%. So the day before earnings, the implied volatility averaged 36.2. Day after earnings, the implied volatility averaged 32. 5 days out, the implied volatility averaged 31.2. So that's how this looks going into earnings and what it did after.
Awesome.
We're up at 9:30, so I'll let everybody go. Have a good trading day. I don't know, any last words, Will?
Yeah, just listen, we have a lot of questions out there that may or may not have been answered. I mean, the chat was firing by. So please, I put a link to the forum. Ask those questions in the forum. We have a lot of chameleons who get in there and ask them, as well as the big D man. You try to ask a lot, I see, which are very, very helpful to everyone. Thanks for joining us. Remember, a thumbs up. And if you're new, make sure you subscribe to the YouTube channel. Dima, great job as always. Thanks so much, buddy.
Thanks, everyone. Have a great day.